So in our previous episodes, we've looked at unit versus house in Greater Melbourne. We've looked at unit in Sydney versus house in Gold Coast. We've looked at two houses in Greater Sydney area. And today, let's have a look at two properties, one in the biggest city of Australia, which is Sydney, and the other in the smallest capital city of Hobart. How will they go? Let's find it out. Now, shall we look at the RP data? Our property number one is an old apartment, not a new apartment anymore, built in 1993 in Darlinghurst, which is a suburb very close to the Sydney CBD. It's one bed, one bath without car space. And again, at this location, we don't really need a car. It's walk distance to the CBD, and it's very close to this main road called Oxford Street, where you can find plenty of buses. Yeah, I'll just zoom it out to show you the location. If you're listening to us on iTunes or Spotify, check our YouTube channel to see what I'm showing here. Okay, let's go back to the photos of this apartment. It's on level 17 with a very nice city view over Sydney. At the corner, you can even see the harbor. And then the building itself has a swimming pool, spa facilities, and nice barbecue space at the rooftop. So it was sold at the end of 2013 for $420K. Wasn't bad at all. It was me. I would want to live there. Okay, let's move on to our property number two. It is in Hobart, suburb, North Hobart, an old house built in 1961. And when it was sold in 2013, it was not renovated at all. Let me show you some photos from 2013. This is the bedroom, the backyard, the bedroom again. You can see from all the features, they are not really modern. I would say it was last renovated in the 90s from the style. Yeah, bathroom not fancy at all. The kitchen as well, all the facilities seem old. It is a 3-bedroom, 2-bath and 2-car space house on a piece of land of 503 square meters. It was last sold in early 2014 for $420,000, the same price as the Sydney apartment. So, between these two properties, one in the center of Sydney, very vibrant area, and the other in the smallest capital city of Hobart, where life is quiet, no fancy features about the property at all, which would you choose? I'll leave that with you for a sec, and we'll be back. Now we're back. Let's check how they have performed over the 10 years after that. Cool. For property number one, what we can see here is that the estimated value now is $655,000. It is around 55% increase from its sales price 10 years ago. To be honest, 55% seems like a good growth if we are considering apartment. Greater Sydney's average unit growth in the last 10 years was actually 38. So it's above average. And if you look at estimated rental price, not bad, $650 per week for a 1-bed, 1-bath unit. It is quite a nice price. Let's check the property number two. How did it go? Okay, after 10 years, property value now is estimated for $845,000 compared to the sales price of $420,000. The growth is more than 100%. And if we check the rental estimate, $616 per week, not as good as the Sydney unit, but if we think of the yield on purchase, it is still 7.9%. Quite a healthy rental yield to give you a healthy cash flow, even under this high interest rate environment. So comparing these two properties, so why the Sydney unit became the poor choice? The two main reasons is one, it was affected by the abundance in apartment supply in Greater Sydney, and two, the low land to asset ratio. If we look at the apartment supply level in Darlinghurst itself, you'd be surprised that the number of listings of apartments in that suburb really didn't grow much over the 10 years from 2014 to 2024. However, apartment prices here is not just determined by the local supply level of the apartments. It is actually affected by the overall supply level of Greater Sydney. For reasons why Greater Sydney's apartment supply is affecting Darlinghurst's apartment market, check our episode 2, where I was talking about Sydney's apartment versus the Gold Coast house. And as to the second reason about low land to asset ratio, I've been talking about all the way from episode 1. As an apartment, the most of what you pay at the beginning went to the building itself. It doesn't matter really if it's a new building or an old building. For all apartments, the land to asset ratio is always much lower than houses. So what's the lesson here? What could you have watched out for to have avoided this poor choice? I believe the lesson here is to get rid of the belief that larger population means larger profit. Sydney has the largest population across all Australian cities, while Hobart is the smallest capital city with well under 200,000 people. Many investors would think that buying in Sydney, the largest capital city, would have no problem. Housing demand would be always high, while buying in Hobart, such a small city, would be risky, where housing demand is constantly low. However, data has suggested that that belief is totally wrong. When we look at population versus housing demand, we have to look at it relatively. While Sydney has a large population and high housing demand, the supply of apartments is high as well. On the contrary, while Hobart has a small population with a lower housing demand, the supply of houses is also low. So in the end, it is crucial to look at housing demand and supply relatively instead of just looking at the population size. So to summarize, we've looked at 2 properties today. One is a unit in Australia's largest city of Sydney. One is a house in the smallest capital city of Hobart. In the end, the property in the largest city was the poor choice. To avoid the poor choice, just get rid of the belief that larger population means larger profit. I hope you have enjoyed the 4-part series, where we break down profit versus poor choices. If you would like some help avoiding the poor choices and leaning to the profit, click the link in the show notes to talk to a team member from InvestorKit today. My name is Junge Ma, lead research analyst at InvestorKit. I hope you enjoyed the show, and I'll see you soon.